I have 100% conviction of that every single person on the internet will use blockchain. 100% conviction. The number one thing I look for is traction.
How do you navigate through the markets and pick those projects that you think those have a unique USP?
So this is going to be hard for people who want to make their first venture in the space to hear, but really you look at...
Meet Robby Yung, CEO of Animoca Brands, a $5.9 billion venture capital company with over 1,000 employees. Robby has been building in digital entertainment for over 2 decades and now leads a portfolio of hundreds of blockchain projects. From gaming to infrastructure, he is backing the builders of Web3 and helping shape the next generation of blockchain technology.
The bear market continued way longer than we all wanted to.
People understand that there's got to be real value that's seen there.
How do you see the next 1 to 2 years in the markets?
That's not an easy question. So I think it's...
Robby, what is the biggest misunderstanding about gaming and Web3 in the current markets that you're seeing from your perspective?
The biggest misunderstanding, I mean, it's hard to pin it on one specific thing, but I find that there's a trend, which is that traditional Web2 game makers, I think, misunderstand what the purpose of tokenization is and misunderstand, I think the way that game developers have made games historically, while there is tremendous innovation, there's also a long history of iteration, meaning somebody comes out with a good game and then somebody makes a better version of it, and then somebody makes a better version of that, etc., which is how you end up with Candy Crush, being whatever, the 50th match 3 puzzle game. I'm making that number up, but it was not the first by any stretch, but they refined the model to the point where it became a juggernaut. And it took years, more than a decade probably, that people were playing match 3 puzzle games. And so I think with Web3, the challenge is there have not been models for people to copy, right? People tried with Axie Infinity shortly thereafter to clone it and be like, okay, I can do this, but let's do it a little bit better, or let's see if we can make the tokenomics more sustainable, or what have you. And so with that lack of role models, if you will, out there in the marketplace, I think Web2 developers struggle to see the potential returns on what can be quite a risky investment to go in a new direction. And then, compounding that problem, I think, games, as I just kind of alluded to, are, a risky business to begin with. And so they require upfront investment. They require investors who have confidence, in venturing into making a game with an uncertain outcome. And so it compounds the risk not having models, established models to follow.
Is it, as far as I'm in the market for 8 years now, and I've seen the stage of NFTs and the stage of metaverse, and then the first games coming out that have been designed by Web3 builders and had a terrible UI and UX.
Mm-hmm.
And with the recent games coming out, like Godzilla, for instance, that completely cleared, but then there's still the question of why should you use a token?
Mm-hmm. So
is that it's a general question, but
sure. So I think there are a few ways you can come at that. One great answer is that I was sitting with a friend yesterday. I don't know if you know, but I'm in London, and so AVAX just had a big event this past week in London. So lots of people building on AVAX, on Avalanche, were in London. And so I caught up with my friend from Nexon, and Nexon notably launched their MapleStory, Web3 game and token this week on Avalanche. So they were in town. And it's interesting when you look at something like MapleStory, because MapleStory is, it's a legendary game franchise. It's been out for 23 years. They literally invented the free-to-play model. It's about as legendary as you get in gaming, especially in Asia. But yet they had a problem because over 23 years, when you have fans that stick with you for years or decades, you end up with crazy inflation. I guess from the Bitcoiners' perspective, just like the physical world, with currency. Um, but you end up with crazy inflation because you end up with millions upon millions of assets out there in the marketplace. And so the reason that they, as a very traditional, not even a Web 2, they're a Web 1, they're a pre-web game company, um, decided to use blockchain was because they wanted to tokenize content to try to figure out a solution to the endless inflation of the economies of their game. And so they came at it even not thinking about launching a fungible token, for example, at the beginning. As they matured their ideas, they decided a fungible token made a lot of sense for them. They've tokenized in-game content as NFTs, etc. But I think it's less about where they ended up that where they started their thinking, which was, oh, blockchain actually solves a problem that we have with, despite having this hugely successful Web 2 game, we could do it better, and we think blockchain is the tool that could help us to make it better.
What is the reason that a lot of these relatively old games take so much time before they integrate Web3 or think about Web3? I mean, the reason why I'm asking is that I've been to Paris Blockchain Week, and there was the Cointelegraph event at Shangri-La. And I was listening to the PSG head of Web3, Par Helgerson is his name. And he was talking about the integration of the token, the PSG token, into the PSG ecosystem. And he said, well, we try to optimize the case for fans to be more connected with PSG, and blockchain is the solution. But we're the only one. There are not many other clubs out there really thinking about this solution.
Yes.
And it's broadly the case. It's also the case with games. It's also the case with art or like real estate or whatever market you're in. What is pushing back on those companies, or what is preventing them to join the Web3 space?
Okay. So luckily we have some time. This is going to be a long
I'm going to get
answer.
some coffee.
So there are three things I can think of that are at play here. So with regard to what Para was saying about PSG specifically, I think football clubs and football IP has an inherent problem, which is that football clubs are in the business of doing two things: selling players and selling advertising, and that's all they do. And everything else is tangential and unimportant to them, or it's in service of one of those two goals. So the challenge for people who want to use IP of football clubs is um, it's very difficult to make a kind of a joint venture type relationship with a football club to say, let's build a product together, because they have all the products they want already. They don't really want a video game or a blockchain product or a line of toys. They actually just want somebody to come and say, here's a bunch of money, let me do it, and I'll just write you a check. And then they can use those checks to go and buy more players, because that's fundamentally what they want to do. And so it's very difficult to even start that conversation, because from our perspective, for example, if I want to license IP to make a game, if I spend millions of euros upfront writing a check to PSG or some other football club, then, my game already has a difficult enough time, in terms of chances of success anyway. And then I'm out of pocket, possibly the entire equivalent of the budget of the game to my licensor for the IP. And that's essentially a user acquisition cost for me. So it becomes the beginning of wildly overspending. And so the only companies who can afford that, of course, tend to be the very large, which is why EA has their FIFA franchise, or did. And so I think that's one part of it. The second part is that traditional game companies tend to be the last ones to innovate when it comes to new platforms, and I think we can consider Web3 to be a new platform in the same way that we could consider mobile to be a platform, or web or a new console device to be a new platform. And the masters of the new platform, from a software standpoint, always tend to be people who are native to the platform, because they understand what's new and different, right? Everything from Arovio with Angry Birds, where they innovated the fact that you use the swiping mechanic to play. And, this was 2 or 3 years after people had already tried building games on the iPhone, but everybody built miniature joysticks on the iPhone, and you had to use it with your thumbs because they were trying to replicate a controller from a Nintendo or something like that. And that didn't work on the phone. It was not a native sort of UI. And so when Rovio said, no, we should just use swiping because that's what's really great about this phone. And all of a sudden, look at what happened with Angry Birds and every game since, right? Because they learned how to harness the native mechanics. Um, and the native mechanic of Web3 is that there is ownership and there is interoperability. And so, unless you really lean into taking advantage of the ownership, of the interoperability, of the fact that you have permissionless assets, right? So, I can go and build another game using MapleStory assets, right? I can just go and use assets from one of the most famous games in history now, if I in my game, without even asking them, because I just have to attract their users to bring their assets with them. I mean, that's amazing. And so, if you already have built a hugely successful business, from previous franchises, you will find that they will be reluctant to change. And I think I'm with love, I will point the finger at EA again, or Activision on this, because what you will observe in their behavior is they will just wait until the platform matures and then acquire the market leader. Because they're
Mm.
not in the business of driving innovation, they're in the business of being a large cap stock that can deliver results year after year. So they're just going to wait until everything matures and they know who wins.
I think that's not really uncommon. I mean, we recently had the takeover of Deribit by
Hmm.
Coinbase, which is also kind of similar
Hmm.
in the Dutch markets with a lot of those asset managers or exchanges. They are being taken over by the big parties. You're a VC as well, an
Hmm.
investment firm. So, if hypothetically you talk about AVEX, the AVEX Summit, if FIFA comes around with a project
Yes.
to get funding,
Yes.
would you be open to fund FIFA?
Of course. Of course. Well, it all depends on obviously the individual transaction, but
Yeah.
I mean, if somebody's coming with IP to the party, that's very exciting, right? And
Hmm.
sometimes those projects, even they can be individual game studios and they can say, oh, we already have a license to such and such IP from film or TV or whatever. And that's part of the thesis of the project. Absolutely. And I mean, you know, obviously we love IP. It's literally in the name of our, our company. And if you look at our probably most famous game at the moment is Sandbox, which is an open world metaverse, and it's basically the home for brands. I mean, the real strength of Sandbox is that they have secured relationships with so many brands because the thesis behind building an open world like that was to make it feel familiar so that when you come to the world, you can see all the brands from the physical world that resonate with you.
Hmm. I mean, I think a lot of the watchers will know Sandbox. Will also know the rise of the NFTs and kind of late stage 2021 we had Metaverse coming in.
Hmm.
What progress do you see over the past 4 years in those particular verticals that have changed so much that we probably are going to get a revival again?
Sure. So, I would say we will definitely have a revival, although I would actually argue that it's not so much a revival, but it's basically just, it's actually just progress over time because the people who are devoted towards this idea of using blockchain technology in game and entertainment products, they're just building, right? And they're still building and building and building. And, you might have heard of them or you haven't paid attention to them, but they're always building in the background.
Hmm.
Um, and I think the only question is whether, it becomes like the real meta or the zeitgeist. And I think it did in 2021 also thanks to, no pun intended, Meta, meaning Facebook changing their name. So that attracted a lot of attention to the space, even though what they were actually doing was based on VR, not based on what we in the Web3 community were doing. But
Hmm.
it helped focus people's attention. I think what we've seen over the last several years is a lot of progress by people who have been building serious products, like you mentioned, Gunzilla, for example, with Off the Grid. Things like MapleStory that's just come out, and MapleStory being an exception to the last question that you asked me, meaning it's very unusual to have a big established game company like Nexon migrating a core product into a new platform at this early stage. So full credit to Nexon for taking that risk. Um, but I think one way to view that in perspective is, of course, that Korea as a market was a very early adopter of Web3 and of crypto. And so perhaps from the Korean perspective, it's actually not that early as it may seem to Western audiences, for example, in terms of the market. Um, so I think the thing about games, as we all know, is they take a while to make, and to make good ones. But I do think that we've learned some things in the Web3 business about how to make games and how to make game economies sustainable. Because I think that was the big issue we had back in 2021. Is I don't think people really we hadn't experimented enough with tokenomics to really understand the impact of having fixed supply economies and open economies. And now I think, we've made plenty of mistakes, both us and other people in the industry, to kind of learn lessons and figure stuff out. And I think one of the things that's really interesting that I think stretches across Web3, but particularly is exhibited in games, is that we can think about games as products that are very different from how we thought of the last generation of games in Web 2. In Web 2, we were thinking about games as real mass consumer products because thanks to mobile, the sheer numbers of people playing our games, the combination of mobile distribution and free to play, meaning anybody can download it for free and try, means that you would expect that when you launch your mobile game, back in 2014, you would expect that you'd get 30 million downloads in the first week, and that a ridiculous number of people would try your game. I mean, assuming like you get featured on the App Store or something like that, right? Um, and and so that became what people thought success in a game looked like. And it was based on this model of a very small percentage of the players paying, and basically subsidizing all the free play of everybody else. And you were building this user acquisition funnel, putting the 30 million people in the top to find, the 50,000 players at the bottom who were really spending the money. And the money they spent was still relatively small, with notable exceptions of some hardcore games. Uh, but I think what we're finding in Web3 is that actually the funnel is more like a pipe, meaning you just go out and you find those 50,000 players from the beginning and they all pay and they all spend because you're essentially building a product for superfans. And so you're only attracting mostly those superfans and not a lot of people who will just basically come and try it for a day and then leave. Um, and that's partially because we often ask players to acquire assets up front. So there's an initial spend required in a game. Um, but I think it's also because the infrastructure that we have of blockchain allows us to process payments and give ownership of assets so cheaply to customers. First and foremost, obviously, we don't pay 30% to other platforms for distribution. So that allows us to be able to create profitable businesses based on much smaller audiences that pay much more money on a per player basis. So we can really focus on servicing hardcore fans. It basically makes, it makes every game business class instead of economy, if you will.
Well, that makes sense, but I think we had two like really good cases coming in this year, or maybe it was actually last year. We had Hamster Combat attracting a lot of customers or users in a really short time frame, but that was during the Telegram saga. And then we had Godzilla getting a lot of attention off the grid, also primarily because some big streamers were jumping in from the get-go that attracted a lot of users. But then what we also saw during the stages of Hamster Combat, and we run our own VC, and it's kind of standard, is that there's one big example doing really well, and then you have 60 copycats just trying to do the exact same, diluting the markets. And it's the same right now with AI agents. On a weekly basis, I see like 50 to 100 AI agents being built, and it's all the next like big thing, but it's not. How, as a venture capital or an investment firm, how do you navigate through the markets and like pick those projects that you think those have a unique USP?
So this is going to be hard for people who want to make their first venture in the space to hear. But really, you look at the experience of the team.
Hmm.
Because what you want to see is you want to see a team that has tenacity and resilience. Because what's going to happen invariably is you're going to have a concept and an idea for a game, and you're going to come up with your alpha and you're going to test it with a small group of users, and they're going to hate it, and then you're going to go back to the drawing board and you're going to tweak it and fix it and change it, and then you'll do that again, and you'll rinse and repeat. And you know, if you're if you're typically, I'm going to stereotype, but if you're an Asian game maker, typically you'll do that in public with a live game. And if you're from the Nordics, you will do it in a private closed beta forever and ever until it's perfect and then release it to the public because there's a different approach from different cultures. Um, but it's the same thing. The product that finds success is going to be very different from the product that you initially launch. And the teams that succeed are the ones that are able to navigate that journey of iteration and listening to customer feedback and balancing player feedback with, your own gut sense of what you think makes a great product. Because of course, you also don't want to be, that film director who just listens to the audience and doesn't make a great film because you have a vision too. And yet you need to be commercial and give them what they want. So you need to balance those things, right? And that's where the art of making games comes in, I think.
I think it's actually even broader than games. I had a podcast the other day with Sunny, the founder of VeChain, and he brought up some interesting stuff, which is that at this point, institutions might not be interested into new projects, but they are more interested into older ones, learning from their mistakes and continuing to improve. And as a retail investor, you kind of had the flow of the last cycle to have a higher yield if you invest into newer tech because they provide a solution for an older problem. But now it starts to change a little bit. That we see AVAX, for instance, completely rebranding and improving. We see Chainlink doing a lot of TrustFi stuff. Question is still whether the token is required, but that's a different topic. How do you see that? Are you still primarily focused on newer projects or also looking at older ones, learning and improving?
So I think honestly, it's a combination of both because I think you can find success in both places. One of the advantages of teams that have been together and out in the market for a while is they learn, right? And they learn and they figure out their mistakes. And I guess the question is just whether they can adapt the tech that they started with, or, in some cases, I admire people who have the courage to essentially just scrap all their tech and start again because they realize it's not working, and yet they can stay true to their product vision because they realize there's a better way to do it, but to transform your manufacturing plant from making petrol engines to electric engines midway it's a tall ask, right? And it's hard to swallow. And often people will just follow through with the original plan because that was the original plan. Um, but yes, I think there's value and there's interesting stuff to actually be found from both camps. And then there's a slight third road too, which is there's a lot of new startups now being started by people who come from teams where they learned lessons 3 and 4 years ago. And that's also a very interesting path where people came out of early protocols or things like that and learned a lot and then, applied that to doing something new and novel because maybe they saw an interesting way. I think one exception to that, in my opinion, would be things like core infrastructure. So let's say L1 blockchains. Um, I think the fact that you can point to something like Ethereum uh, and its record of success in kind of operational uptime for the long term, I think is something that's very, very important because if you think of somebody with a very, with a product that is cannot sustain any kind of fault or error like a financial institution, you're going to choose the infrastructure which is most safe, not necessarily the one that is, the fastest or has the most features. It's all about safety and security first. And so in that case, track record actually speaks volumes because, there have been bad actors knocking at the door of Ethereum for years and years and years, and they haven't been able to get in necessarily. Whereas somebody with 1 year old tech, which is amazing, still you could argue is not proven yet just because not enough people have tried to make it fail.
Well, at least then there's still some hope for anyone holding ETH, I suppose.
Yes.
Uh,
Hey,
there's
the one thing that's reliable about ETH is the price never changes.
Yeah, well, at least there's that meme of like Bitcoin hitting new record highs and ETH just keep on falling. The first time hitting 100k, ETH was like 4,000, and now it's like two. I mean, all in all, I think that ETH is still a really good layer one. It's an infrastructure that we require. I like the fact that a lot of layer ones are adapting into a niche. For instance, AVAX is really controlling a certain vertical, and there are more out there trying to focus and adapt a little bit more.
Yes.
And one of the other podcasts that I listened in preparation about you, or like one of the fireside chats that you did, you mentioned that half of the portfolio is in infra. What type of infra are we thinking about if you...
Sure. So everything from L1s and L2s to marketplaces or tooling or, SaaS products, just people making wallets, you name it, custody solutions, ZK businesses, just people who are making stuff that is required to participate in Web3 as opposed to, end user applications.
And if we, like you have, the VCs have the first view of what is going to be the markets in 5 years, they say. What is the one that is exciting you the most out of that entire infrastructure that you think is going to have an actual use case? And let's stay away from stablecoins because that is like being attracted a lot right now.
Sure. Well, and also, I don't think there's anything to talk about with stablecoins. It's a foregone conclusion.
Yeah. I mean,
so
there's
I
so
think
many though.
yes. So I think I'm gonna say three things. One, creator economy. So anything that from social media to UGC game content, anything that allows users to create because we can provide Web3 infrastructure that is very inexpensive to manage the creator royalties and allow for mass distribution and utilization of content, respecting royalties and royalty payments, even down to the smallest micropayment. And so that is revolutionary because we are going to move away from a world where, like, you would know this better than me, but if you have a YouTube channel and you make advertising revenue from it, you need to hit a minimum threshold before payment kicks in. And that threshold can be challenging for lots and lots of creators. And that's essentially because the payment costs are too high, right? For like you can't scale the split of ad revenue on videos infinitely, or at least that's what we're led to believe, which is why YouTube doesn't do it. Maybe they can, and they just like to take profits there. I don't know.
I don't know either.
but but anyway, so creator economy is definitely one of them. I think RWAs, specifically, when I say RWAs, I mean the financial services definition, which is things like equities and private credit and other financial services that are from TradFi. Um, that's a no-brainer in the same way that stablecoins are. However, that one is subject to the most regulatory change. So when and how that happens is basically dependent on legislation in various jurisdictions. So that's actually less of a tech question. Um, and then the last one that really excites me is DePIN or physical infrastructure, because I think it's the same as the creator economy. What we've done is we've found an incredible way to incentivize participation in the aggregation of data. Because if you think about DePIN, it can be everything from, giving permission to have your your electric car's data shared with a network, or putting in an app in your mobile phone to track your behaviors in various ways for research purposes or whatever. Just this idea that you can allow people to do this, but unlike the way that Google has built Google Maps, essentially just tracking us all with our permission, so to speak, you can compensate people for it. And so if people have time on their hands, they can go out and drive thousands of miles to provide data to the network and get paid for it. And and I think that that's really exciting because what it does is it allows people to kickstart the creation of products and applications where previously the aggregation of that data would be prohibitively expensive. You know, um, like one of the greatest mapping data sets in the world um, is actually the one from the video game Pokemon Go, right?
Really? I didn't
Yes,
know that.
yes, because Niantic, who made the game, has this, I forgot what it's called. It's called Light, I want to say it's called Lighthouse Network, and they can essentially provide you data down to 10 centimeter accuracy, um, basically mapping every major city in the world because they had hundreds of millions of players mapping data all day long in every city hunting for Pokemon, right?
Mhm.
That was basically DeepIn right there.
Well, it's interesting that you're saying this because one of our core verticals that we invest in is actually Deepin. Um, we have invested into multiple projects, but we keep on bumping into the same good old question, which is what is going to drive the demand for like a company that comes into the platform spending dollars so you can actually be rewarded? That's the constant question because what you see with a lot of deep ins right now, aside from the bigger ones,
Mhm.
is that prior to TGE, they have an airdrop, everybody hunts the airdrop, the project goes live, it falls, and then there's no supply and there's no demand anymore.
Yes.
Is that because there is still no market and we need to define it, or what is lacking for those deep in projects?
Yes, and I think often you have what they call the cold start problem. So you need to have some kind of tipping point, as you said, either the ability to have some upfront investment or the ability to kind of, leverage the forthcoming TGE to excite enough of the audience to provide you with that momentum.
Mm-hmm.
Because because the problem is like I'll give you an example. So I use Waze for maps when I drive in my car. And I use Waze just because my experience has been in every Uber that I have taken in cities around the world, everybody's always using Waze. And when I ask the drivers, what do you use? They all use Waze. So that's my assumption for the fact that it has the best traffic information. And so I take that for the best traffic information, but the app has been around for, 15 years probably. Um, and it wasn't as good before. It gets better over time the more you use it. And so the hard part is how do you onboard people when the product is still needs more users to improve the product to the point where people really want to use it. And so that's where you have to figure out how you can how you can manage the incentives appropriately. I think the other way to think about it is that you don't also have to limit your kind of deep in incentive infrastructure just to consumers either. You can do it in B2B fashions as well. And so I'm familiar with an entrepreneur here in the UK, and she has a telecoms business, and she literally just uses um, tokenized incentives to have telecom providers exchange data and traffic between each other. So it's essentially just used as the medium of exchange between telcos.
That's actually really interesting. Yeah, I do. Well, I've been to Token, and this time I decided to get my own car and drive around in Dubai,
Okay.
which is a challenging case. If you want to drive there and get mad, then that's probably the best place to go. But Waze is so easy to follow with all the
Yes.
lanes and all the stuff. It's really good. But now, if we talk about like Deepin and the involvements of VCs, I think we talked about it on stage as well. Is
Mhm.
the fact that right now the private markets are pretty much dead.
Mhm.
At least the past quarter was really bad for VCs, primarily because founders are racing on valuations that are substantially high. And then at TGE, you see a pretty bad chart happening and taking
Mhm.
place there. What's your thesis there? How do you see the private markets changing over time?
So I think there's always a lot of variables at play because some of it depends on appetites for TGEs at that given point. Some of it depends on the appetites for centralized exchanges to support those TGEs and give
Mm.
them distribution. Um, and so the relative success of any particular token has a lot of things that are both within the control and not within the control of the project team themselves. And that always makes it challenging to predict the outcome. I guess I guess that's what keeps it fun for the rest of us. Um, I think um, my view on the market itself is that I think this year, and it's not financial advice, but I do think
Mm.
the second half of this year is going to be quite positive and quite strong, in spite of the fact that obviously we have all-time highs of Bitcoin at the moment. I don't know if that's just excitement for Bitcoin Pizza Day yesterday, but it's a nice coincidence. Um, but I think the market should be strong. I think it's responding to, the macro environment of the US really being supportive of what's going on in Web3, or at least at the worst, not being negative anymore. And this has unlocked a lot of activity, particularly from US investors and US companies coming into the market. And obviously, with the size of that economy, it has an outsized, effect on the rest of what's going on in Web3. Um,
Mm.
so I actually think that we're going to continue to see a lot of activity. And I think that the nice thing about the relative maturity of what's going on, I mean, for people like you and I who've been in this space for many years now, we can see the evolution of how actually a lot of the founders in the space now are um, quite experienced and have been in the space for we used to joke that being in a space for a year meant that you were a veteran. Now, now it's like 3 years or
Yeah.
more. Um, but but what it means is that you're not going to see people suggest to you, "Oh, I've got this brand new application with 5,000 test users and I have a 100 million FDV." That like you can't have those realistic conversations anymore. People understand that there's got to be real value that's seen there, even for stuff that's hyped, because I think most of the hype activity has still been kind of in the meme coin sector since last year, which is nice because it takes the burden of the hype off the rest of us.
That's true, but it always sickens me if I see meme coins going extremely high and I'm sitting there in my utility coins praying for a little bit of upside. I mean, last year we had an entire saga coming in from Binance regarding venture capitals, and that created a lot of negative sentiment
Mhm.
surrounding companies like us. But like, why do we need venture capitals to step into the market?
Sure.
That's like a constant question that people don't seem to understand.
Sure.
So,
So I think I'm going to generalize and I'm going to aggregate two kinds of investors. I'm going to say venture capital, but also just institutional investors generally,
mhm.
as opposed to retail investors. And I think both of these things are important and they have a role to play. They don't necessarily always have a role to play in each situation, but I think venture capital has a role to play in Web3 businesses because back to the cold start problem, it takes a certain amount of resource to get to a certain point in building a business, and not every Web3 business is in a position to essentially crowdfund from its customers because they may be building some kind of tech that requires strong upfront investment, for example. So venture definitely has a role to play. I think the negative press, which I think wasn't necessarily undeserved or unfair. I just think it got way out of hand and out of
Mm.
proportion. I think the negative press around the activity of venture is due to the fact that token unlock schedules and managing token tables was not well done in many projects' cases. And if you don't manage your token table correctly, then people are going to sell when they have the opportunity to sell and the market, is favorable to selling. That's economic behavior. And so if you don't want them to sell, you need to work with your people on your token table to either lock them up or negotiate with them not to sell. And that's part of the process. And managing that is not easy. It's a big job. And small teams may struggle with that or not be aware that that's something that they really need to be spending time and attention on. Um, the last sort of comment I'll make on this is when I mentioned institutional, capital as well. I think it's important when you think about having a TGE that I also think this narrative of having a fair launch, which essentially is a kind of a free for all that's open to the general public and focused just on the retail public, is also not the right approach for the most part. I think that projects should seek to have a balance between community shareholders, but also institutional holders, because what you want is you want to also have token holders who are able to weather short-term pain or short-term storms. Not every retail participant in your TGE might be able to just say, "Oh, well, the tokens dropped 50%, but it's okay. I'll wait 6 months." They might need the money, right? Who knows? It's personal circumstance. But a professional investor who comes in and invests in your project may say, "Look, I like this project, and I like it because I have a 2-year view on what you're going to do with this product, and so I'm going to wait until the end of 2 years to see what the result is. And I don't care what the token price is, in the middle, because that's not my thesis." Um, but, like any venture investment, you have to negotiate that and find investors that share your vision like that.
True, that's completely true. And I think that a big part of the misunderstanding is that people assumed that once TGE happens, that the dump is actually being created by venture capitals.
Hmm.
But most of the time, they are not able to sell at all.
Hmm.
And if you are a legitimate FVC, then you have the ethical part to just not sell on the open markets and go through the market maker, or just
Yes.
sell your token unlocked through with an OTC and have another vesting and roll it over. And there's a lot of information not being shared to the public that people do not know.
Yes.
But on the flip side, what you see right now is that there are a lot of projects doing a long cliff with a long vesting,
Hmm.
but it doesn't make it attractive to become an investor into the project, because usually after the launch at TGE, it drops so fast that I'd rather be a liquid buyer instead of
Yes.
having the cliff.
Yes.
Should we just like go back into the Web2 space and have low evaluation pre-seed rounds or seed rounds and just be a little bit more normal, or at what stage are we?
It's hard to say, and as you said, these are kind of general trends. I think what will end up happening is that actually individual projects will choose what type of model suits them the most based upon the investors that they find. I mean, as a general practice, I think we found that a lot of venture investment in Web3 businesses has essentially traded, liquidity opportunities for other types of risk, because the feeling is I'm willing to take a much higher risk upfront if I know that this is only going to be locked up for 6 months and that I can cut my losses after 6 months if I need to. And that's a different investing style than, say, traditional venture, where you say I'm in this for 3 to 5 years or longer, and maybe even 7 years before I have to have a mandate that I must sell my position. Um, and so I think it's up to individual projects to find those investors that share a vision that aligns with their time schedule, most importantly.
Fair enough. And there's also the active debate that we see pop up is whether you actually need to create a token.
Hmm.
There are a lot of projects now shifting more into just using blockchain and becoming an equity company.
Hmm.
And there is a bigger shift of like not even meme coins, but more community coins that are creating a token where the actual value goes towards the token.
Yep.
Would you invest into a project that says we have value going to both?
That's not an easy question.
I know.
Because I guess that was the point.
Yeah.
Excuse me. So I think that it's hard because, as we know, the presence of tokens allows value to accrue in multiple locations. And this is always a challenge for Web3 businesses because if, you have to ask yourself if value is being created in equity or in the token. And that's something that you can't really generalize because it depends on the individual business. Some things may accrue only value in the token. Some may take revenues apart from the token, and so token appreciation is not, is not essential. So it's up to the individual case. I know that's kind of weaseling out of your question in a way,
Mm-hmm.
um, but I do think for us specifically for Animoca Brands, our view is that tokens are the incarnation of network effects. And so we always like to see tokens because we think that, and I say tokens, I'm meaning fungible tokens, because we think these utility tokens are how you enhance the network effects of a business. And that's what interests us about a business specifically. So we would be less likely or unlikely to invest in a business that did not have at least a path to tokenization, because that's our thesis. That's not for everybody, but that's our
Mm-hmm.
thesis. The other part of that is we also believe very strongly in supporting the ecosystem. So one of the things that we do is once we invest into a token, we will take those tokens into our treasury and we will use those tokens to provide liquidity. And so we will constantly be leveraging our existing balance sheet of tokens to provide liquidity for our projects and our investments, because that's one of the things that one of the pieces of value that we can add to our portfolio companies to help them after they have listed is to help them as liquidity providers. And this way we can utilize all those tokens from each individual project and keep recycling them into the system, because we think investing them back into the ecosystem helps the ecosystem to grow. And the reason that that we learned this kind of the hard way is, this is a great example, and I credit Yat for this one because I think you might have heard him talk about this before. But we spent many years as a game developer in the Apple and Google App Stores. And if you think about the Web 2 model, the Web 2 model has historically been very, very extractive, and we think that that's bad for um, it's it's bad for the health of the industry, really. And if you just take the example of Apple, Apple has whatever a balance sheet of $1 trillion of cash, something like that. I mean, insane, right? And imagine if they decided that they were going to create a creator fund. So they put aside 5% of their cash and say, we're going to make a fund and we're going to invest in companies that build apps for the App Store. So it's completely self-serving, right? They're just seeding their own ecosystem because then they'll go and take 30% off the top of everything that those people do afterwards, right?
Mm-hmm.
But if they created that fund, that would be the biggest VC in the world by a long shot.
True.
I
That's
mean,
actually true.
it'd be a $50 billion VC.
Yeah, from the
Right?
get-go.
From the get-go. And it would grow their ecosystem. It would put money back into their ecosystem because actually they wouldn't spend all that money. 30% of it would come straight back to them, right?
Mm-hmm.
Because it's in their ecosystem. And I think it would be huge, but they don't think that way. They're just thinking, you come to my ecosystem, build, and I'm going to take. And then I'll take that money and I'll dividend it to shareholders or, make a new iPhone or something with it. But they don't invest it back into the ecosystem. And that's one of the things that we learned from that experience as a developer in that environment, that we feel in Web3, one of the great things is that we can invest back into the ecosystem. And yet we benefit from that as well, right? Because we're supporting our portfolio companies and we're making the ecosystem stronger at the same time.
Yeah. I think a lot of Web3 companies are actually trying to achieve this. You know that a lot of exchanges have their own venture arm. I think Tether has a really big venture arm, investing into a lot of projects that probably not a lot of people know about. But still, there's like a big funnel of either Web2 founders or Web3 founders coming into the space. And I see a lot of cases where a Web2 founder comes in, builds great tech, but then gets killed by either wrong tokenomics or a wrong partner or unethical market makers or whatever you can name all of it. Um, if a founder comes to you, what's the first piece of advice that you're giving to those founders talking to you, asking for help or an investment?
So, boy, I talk a lot, so I give people a lot of advice. Hopefully some of it's helpful. Um, I think I try to. So first, starting with us, we're a particular kind of investor because we're what you would typically call a corporate VC, meaning we invest off our balance sheet. So we invest in businesses that are strategic for us, as opposed to just investing like a VC firm solely for financial return. Um, so we try to invest in businesses where we can partner with them, or we can, provide them with work or knowledge or, support on whatever, tokenomics or market making or something that we can help improve their outcome. So if there's a role for us to play, then we think there's also a potential for us to be an investor too. Um, and so from that perspective, I think I try to advise. Um, Let me start with game companies, actually, because that's an easy one, and we're talking a lot about games. Um, I think the thing that I always say to game developers is to really think about, especially the ones that are coming from Web 2, that you have to divorce yourself from so much of the thinking of what you knew about making games in Web 2 when you think about embracing the new platform and the new medium. So, for example, most game developers coming to Web3 will think about, oh, I can tokenize my game content now and make NFTs with them, and then I can make a marketplace and people can trade their NFTs. But they're still thinking of the game environment and the world as being the sum of all that they create. They're not thinking about, okay, so what's going to happen? How am I going to encourage other game developers to make games that support the IP I'm creating, right? Because from a Web 2 game developer standpoint, they only see that as, oh, I'm going to lose customers because they're going to go over there to the other game, right? Not, I'm going to sell somebody something for 100 euros and then they will bring it over there, and I'm fine with that because they spent 100 euros. You know what I mean? And I will get creator royalties if they sell it again. So how do you embrace that new medium and think about how my assets are going to interoperate with other people's assets, how I can leverage other people's assets? So maybe I'm making a game and user acquisition is hard. So the first thing that I should do is I should have special opportunities for, other communities, people who have assets from off the grid, or other, or Bored Ape Yacht Club, or you name it, people who are in the community in Web3 already, and make those assets welcome in my game. Perfect example of that would be Pixels, which is one of our portfolio companies. You can bring any NFT into Pixels and use it as your avatar. It's a very simple hook, but very effective because it allows people to self-express in the game, and it leverages that unique ability of Web3 to be able to have that kind of interoperable content.
That's an interesting one. Aside from that, if you have a founder, or like, you probably see thousands of projects being pitched, or perhaps at this point you have a team, so that's not anymore the job. But being in the space for so long, how can a founder excite you? Like, what is the spark that you're looking for if you're investing into a project?
I think so. I'm very lucky because I have a I have a cool job. I get to meet founders pitching me crazy new ideas all the time. And for me and my personality, I love that because I love new stuff, right? So I'm very lucky in that standpoint. I think I see a lot of things that amaze me because there's so many smart people out there with smart ideas. But I think with my kind of disciplined investor hat on, the number one thing I look for is traction. Meaning I I'm always excited by the potential, but I think at least for where we sit as an investor, we like to see at least that, your some semblance of your customers really like it too, and and
Mm-hmm.
and that and that we can see a hint that really what you need is you found 5,000 people who love this thing, and what you really need is a little bit of help and a little bit of money to find another 20,000 to add on top of that, or 50,000 to add on top of that, but that it's proven that there's a bunch of people who really like this, so therefore other people are going to like it too.
That's true. I think if I look at projects that I see, it's just probably the founder, his vision and the way he talks about it, making it simple is probably first step when I really get attracted to a project. Aside from like anything else, if a founder is not like completely locked in, then there's no purpose at all.
Yes.
And then the secondary factors come in of the other backing, the tokenomics and all those things. But first, it's probably just the founder. But now we have, which is a popular topic, we have AI.
Mhm.
How long will it take until we get the first AI project being built by AI? Or let's say more than 50% being produced by AI.
So how do you know you haven't seen one yet?
Yeah. That's actually, I mean, on Twitter, you see those videos of stuff that's being created by AI, and I'm like, oof, that's really good.
Yes. So I guess the thing about AI that continues to amaze me is the pace of progress. That's the main thing,
Yeah.
is the pace of change. And I'll give you an example. Um, you know, I've known one company for many years that's been working on AI tools. And I'm not going to describe it in any detail because I don't want to out them. But basically, they've been early leaders and created some amazing tools. And I just met another company who I think has created something that is a year ahead. And the second company that I met has only been doing it for 3 months, as opposed to 3 years.
Mm-hmm.
Because the tools are so different now that you can jump into the race and catch up immediately. And so what I see is I also see people commenting about the fact that, well, if you're thinking about starting a business in AI and you don't think it's possible now, start anyway, because in 2 months the tools will be there.
True, yeah. But that opens up the question for at least a few of our portfolio companies that have been building stuff for years. And then they try to like push it back a little bit because market circumstances are a little bit bad. And then before they actually go live,
Yep.
then all of a sudden competition comes in and just simply takes over.
Mm-hmm.
How do you like protect your portfolio companies for that?
It's very hard. I think ultimately, so in Web 2, venture capitalists talk a lot about moats. That seems to be the most
Yeah.
popular word. How do you build a defensible moat?
Or TEM, that's another one.
Exactly. And but the thing about the moat is just a euphemism for a monopoly. Really what they want is a monopoly, right? How are you going to build something that nobody can touch because you've got the sharpest elbows and you can keep everybody else out? Um, and then in Web3, the problem is that we have a philosophical aversion to this. Web3 is supposed to be about inclusion, about connectivity and interoperability, not about creating moats, because we're trying to solve the problem of all this siloed data and siloed customers and stuff. But I do believe that in Web3, there are moats to be had. And the moats exist not, in my opinion, in a piece of technology. So we thought for a while that maybe an L1 blockchain was a moat or a wallet was a moat, and there were attempts at recreating that Web2 thinking around particular pieces of tech. And then we've discovered, maybe it's all quite commoditized. Maybe liquidity is a moat, right? But I think brands are a moat. And if you think about it, what is a bank? A bank is an institution that you trust with your money, but do you trust them because of their tech or because they have really impenetrable buildings? At the end of the day, you just trust the brand because a bank is a brand. Otherwise, all banks are the same for the most part. Um, and so in Web3, I think our job, despite the irony of us being in trustless technology, our job is to build trust with our customers and to build brands. And that way, as we build those brands, the products and the tech themselves can evolve over time, but we can carry our customers along the journey with us because they're loyal to the brand.
Yeah, and I think brands are expanding and expanding and expanding. Even brands in the case of KOLs or influencers, they start to become bigger and bigger and bigger. Not only in Web3, it's also in Web2. I mean, Mr. Beast is the biggest brand out there. We have Flight 3, which is Stephen Bartlett's company from The Diary of a CEO, which is a media company and an investment firm trying to push it forward.
Yeah.
Now, if we talk about AI, how do you think AI is going to change VC investing in the years to come?
So, I think it's going to change it in the same way that it changes a lot of what I would call mid to upper tier kind of knowledge worker jobs. Because I think the best example was given to me maybe a year and a half ago. I was at a small conference for the day, and it was an AI conference. And somebody who works at a very large insurance company, European insurance company, was talking about how they've started using AI. And it was interesting to me because he struck on a point that I hadn't thought about, because I was just thinking, on generative AI for content and stuff like that. And he said, we have a very boring traditional insurance business. I just basically am an actuary, so I have to assess risk and then price it. But he said the way that I work is I sit and I talk to the client, and then once I get all the information from the client, I go back to the office and I spend time with my data scientist, and he queries the database on my behalf to be able to help me come up with my risk assessment. And what's happened with AI now is I don't need him, he said. I can query the database myself, because it required a professional to understand how to navigate the database before, historically, and now it doesn't. And I think that from a venture standpoint, there's been a lot of talk about how there's a certain segment of jobs in financial services that, previously were all about, taking numbers and putting them into an Excel sheet and summarizing and aggregating data, pouring through public filings and coming up with a DCF model or something like that. And I think the same thing is true in venture. And so a lot of that will start to be done by AI. But as you said, what is the first thing that you look for in a venture investment? It has nothing to do with AI. It's that conversation and looking the founder in the eyes and getting that feeling of passion from them, and whether they're going to spend long nights trying to save your money, essentially, right? And that's kind of what you're thinking. So I think, the way we've started using it internally is we created a tool, actually, that is a website where people can submit their pitch decks to us. And we created an LLM that's based on all of the previous deal flow that we've had, and investment committee memos and all that kind of stuff, to try to train the LLM to understand what kind of stuff we like, and characteristics of companies and deals we like. And that way, as you alluded to earlier, at least in the Web3 space, when you're an investor, you receive a huge amount of cold calls. I'm sure you do.
Yes.
And most of them get ignored, which is unfortunate, but you have to have some kind of filtration system. And for the most part, the filtration is, if I don't know you or somebody I know hasn't introduced you, then I'm going to ignore you. And AI might be able to help with some of that, so that for the 10 random emails I get every day, then the AI can filter through them 24/7 in the background, looking for those hidden gems and saying, hey, actually, you should take a look at this because this sounds interesting.
I actually agree. I mean, there are so many emails or like inbound in what we call the top of funnel, that if it doesn't come in from a warm partner, it's already not really interesting.
Yes.
And then if you go through them on a day, and maybe your mind is not in the right mindset for that to be going through it, you probably just miss the actual opportunity. So like, or you misread something, or your cat is playing around and you like, whatever that is.
Yes.
But AI is solving a lot of these things because it's just super rational. But then once you go deeper into the layers of the decision making, AI is not that far yet. Like the creativity that I put into the work on YouTube or on social media or the trading that I do, that's not going to be solved by AI yet, but probably in a few years to
Yes.
come. But now, if we talk about some exciting stuff, and we get towards the end stage of this wonderful conversation, Bitcoin has hit 111K, new all-time high.
Yay.
Um, Yay! Yes, another number goes up. But there is the question: are we getting peaked with the markets, or has the bull market started? Which of the two camps are you on?
Um, so I was at a conference at, I'll name them, Goldman Sachs in January.
Okay.
And the market was very bullish in January, as you'll recall. We were around 100K then, if I remember
Mm-hmm.
correctly. Um, and the panel that I was watching was a bunch of, people from traditional finance who buy and sell digital assets. And they were asked the same question. They're like, because this is always fun to do at panels, but particularly TradFi panels, um, you know, Bitcoin predictions for the end of year. And the first person to pipe up said 250K. And the other people looked and they're like, yeah, sure. And everybody agreed. And these are very rational people who are career, bulge bracket bankers. Um, and I think we may have lost a little faith in the time from January until now at various points in time. Um, but if I think about that today, yeah,
Mm-hmm.
250 doesn't seem crazy. I think, again, it's about the maturation of the space. And the question is, what has happened in those intervening 4 months? What regulatory changes have we seen? What product launches and successes have we seen? And for the most part, I think, it's all been pretty good. Um,
Mm-hmm.
I also, though, am not somebody who sits and looks at candlesticks and charts all day long, right? That's not, if I did that, I would probably go insane. um, I just focus
Well,
on trying to help people build projects. And so I always look at a longer time horizon. It's why I'm a terrible trader, and any attempt I've ever made to trade things has never turned out well. So I avoid it. Um, I think, but I do think, if you ask me, are there fundamental reasons why the market should continue to increase over time over the rest of this year? 100%. I mean, everything I've seen, and I go to a lot of conferences, both with real sort of native degen people in the space as well as institutional finance professionals, and I hear optimism and positivity from everybody across the board.
well, I used to be a guy that was watching charts all day and being a trader, and yeah, I people ask me like, why are you doing other stuff? Well, because I don't want to become insane. I just want to like really build some cool things instead of just looking at the screens all day.
Yes.
And what I understand is that the past 4 months, crypto hasn't really provided the price action that we wanted to see, but that wasn't related to crypto, but more to macro.
Mhm.
If we would have focused on crypto alone, I think prices would have been way higher with all the stuff that's happening, with all the upgrades and all the positive regulatory framework in the US. How do you see the next 1 to 2 years in the markets, aside from Bitcoin?
So, we always laugh about not financial advice. It's
It
genuinely
is,
not
but
financial advice. Well, no, only because I'm not the guy to ask about the prices of stuff,
yeah.
because I'm the reason that I love Web3 is that I think when we as a company and as a management team at Animoca Brands discovered Web3 back at the end of 2017, um, we had this gut feel that this was going to be a big deal and that this was going to be a part of what everybody did on the internet. Um, now, I have 100% conviction of that, that every single person on the internet will use blockchain, right? 100% conviction. But can I tell you whether that's going to be next year or 10 years from now? No. And I'm realistic about that. I might be off by 2, 3, 5 years. Don't know.
Hmm.
So my job is to make sure that our business and our investees and portfolio companies, that everybody survives as long as possible until the gravy train comes, right? Because
True.
that's the job of technology, is to survive until you're proven right about things.
Hmm.
And so I think that what I would say to people is I would encourage them to, be bullish, but always also be responsible about thinking about how you manage your cash flow, because a lot of people got caught out in 2023, running out of runway because it seemed like, money was more readily available. And so this is, you asked me earlier about what advice I give to people who are building. And there are some simple things that I think apply to all venture and not just Web3. In my experience as a, you know, startup founder and entrepreneur for almost 30 years now, one thing has always been true, which is I never pay attention to valuation. As a founder, if there's money on the table and people want to give you money, take it. That's my advice, because people don't always want to give you money.
Mostly they don't. That's true.
That's true.
Uh, yeah. I mean, ultimately, I think it's all about if you have a fundamental thesis, that's completely fine.
Yes.
But you also should be having an investor thesis.
Hmm.
Being stuck in one of these two is going to be harmful. I mean, founders have had that period in 2018 where the treasury was in ETH, where they completely got screwed over by the price of ETH going down. And
Yeah.
now in 2023, basically the bear market continued way longer than we all wanted for.
Yeah.
Um, if I'm a founder, where can I find or can I get in touch with you or Animoca? Which event are you going to be attending to next? I
Sure.
know that you're traveling to many, so
So the next one is going to be, I guess, more on the crypto native DGen side. So I'll be in Lisbon for a non-fungible conference, which I love, because it really shows the cultural heart and soul, I think, of Web3 in many
mhm.
respects. Um, just because I love the events where we can bring together everybody from the community, from the crazy street artists making NFT collections to the, people who just like to trade perps, all in the
Yeah.
same under the same roof, right? Because we're all part of one crazy diverse community, and so I think those are my favorite events. Um, People can obviously find us both through our website and find me, on Twitter and all these places, all the usual places. I mean, honestly, you can just Google me. I lost any semblance of privacy years ago, I think, on my Web3 journey.
Or just travel to any of the conferences that you will be attending. I know that you're retweeting all of those where you're going to.
Of
So,
course, I'm
uh,
easy to find.
yeah. All right. Well, thank you very much, Robbie.
No problem.
It has been a wonderful conversation. Always enjoy the energy that you bring on stage or bring in the conversation. So,
Thank you.
good
Appreciate
luck
it,
with
Michael.
everything. I'll see you probably hopping by in any of the next conferences.
Fantastic. Thank you very much. Have a great
Thank
weekend.
you.